Hello again. Thank you so much for watching. Today, we'll be discussing Velocity loan programs. Basically, just the programs that Velocity has to offer, what those programs look like, and what the best selling points for those loans are. Now, before we get started, if you would please hit that subscribe button and the notification bell. It does help me a lot in the YouTube algorithms. And also, if you have not checked out our Patreon, a lot of awesome content there that's helping our commercial loan brokers get to the next level. Now, let's jump right on into it. So when we're talking Velocity loans, there's really three different loans that Velocity provides. And so the first loan is called the Flex Perm loan. That's like a 30-year rental loan. It's their bread and butter that they've been running since 2014. The second one is the ARV Pro loan. It's called the ARV Pro because it's more of a fix and flip style. ARV stands for after repair value. So that's why it's more of that fix and flip deal. And then finally, the Flex IO loan, and IO standing for interest only. This is more of a bridge product. So today we're going to jump into each one of these programs, what they look like, and the big selling points for these deals. So let's jump into the first one, the Flex Perm loan. So first off, before I get into the major points, I just want to note this is a long-term rental loan. See on the left side of the screen, it says long-term rental loan. That's truly what this loan is, and that's who it's for. It's for those investors who have gone to the bank but have gotten denied, or maybe they know that they don't quite qualify for bank financing, but they need that conventional style term. So, they want that 30-year rental loan that a bank would typically provide. So the very first point in hitting this, well, we got all the points here. So hopefully you guys don't go ahead of me, but if you can, go ahead. The first point that you do want to look at though here is the no income verification. So that's where Velocity excels in this market, is that they do not verify income, they do not verify assets, and they do not verify the taxes of the real estate investor they're working with. So what you're looking at here is a hard money underwrite. They'll underwrite like a hard money lender. However, they'll issue that 30-year fixed rate term, which is the next biggest thing for this loan. The biggest selling point is it's a 30-year fixed rate term. So they underwrite like a hard money lender, but they issue terms like a conventional lender, that 30-year term. Now the rate is a little bit higher, as you can see, 6.24 to 899 rate. And that's obviously, that's going to be depending on what kind of property it is, whether it's single family, multifamily, or commercial, as well as where the borrower's FICO score. But the rate actually is very competitive when you're considering the private money space, the type of underwriting we're doing here, and as well as the 30-year fixed rate term. It's just really hard to come by hard money underwriting while still getting that 30-year fixed rate term. Now, there is one other major selling point with this loan is it covers all property types. So 1 to 4 investment properties, that's your single family, your duplex, your triplex. This is your typical real estate investor. It covers your multifamily properties, which includes mixed use. So for example, if you have a restaurant downstairs and you have residential upstairs, that's your mixed use multifamily style property. And then finally, they do lend on commercial real estate. So we're looking at straight up commercial properties, office, retail, warehouse, stuff like that. So this is Velocity's bread and butter program, the Flex Perm loan. They've been running for a very long time. It's been very successful. So this is the first program that you really want to focus on with Velocity in understanding their product they're offering. The second program is the ARV Pro loan. So as I mentioned earlier, the ARV Pro loan is a fix and flip style loan. So it's really for that investor who's got money and they know what they're doing. It's for the pro investor. And the reason why I say that is because of the amount of money that is required to be put down. On this fix and flip loan, Velocity is requiring a 75% LTV on purchase. So that's not very competitive, considering that a lot of lenders out there offer a 90% loan to value on purchase. However, Velocity is still issuing 100% rehab. So the borrowers just got to come in with more money, with 25% compared to other lenders at 10% on the purchase. But Velocity will still cover 100% of the rehab. And if you take a look at that interest rate, 7.49%, that's killer compared to most other lenders, which are sitting around 8 to 12%, right? So Velocity's definitely got the edge when it comes to the interest rate. Now, it is a 12-month interest only loan, like most fix and flip deals. And then also the loan amounts go between $75,000 and $5 million. They do require 650 FICO score, which isn't too hard to fulfill. First-time investors are okay with these types of loans. And finally, don't forget, this product's only for 1 to 4 investment properties. So this is not a fix and flip for big multifamily, apartment buildings. This is strictly for that typical 1 to 4 unit property. And then finally, don't forget, on these loans, you can white label. Velocity is a wholesale lender, so they don't talk to the borrower. And frankly, they just want to be the money in the background. So they'll let you white label they'll let you white label their money as your own money. So the big points here is they're very competitive on the interest rate, 7.49 to 7.99. Doesn't get much better than that on a fix and flip loan. 100% rehab, that's hard to come by, believe it or not, because of the max LTCs that most lenders issue. And then finally, it's for elephant hunting. Most lenders actually cap at $2 million on fix and flip loans. This loan covers up to $5 million. So this is your elephant hunter product. If you're trying to run fix and flip programs, this is where you get those elephants, those whale of investors that are doing fixing and flipping properties in LA, in New York, where the markets are really high and they require much higher loan amounts than the typical $2 million that you normally see out there. And then obviously it's a big seller. If you can white label loans, man, that just makes things so much better for your brand as a brokerage. So this is just your typical fix and flip loan, Velocity's second product in their product offering. Now let's jump to the flex interest only. So flex interest only is a lot like that first loan that we went over, the flex perm loan, that long-term rental, but this is more of a bridge loan. So just think bridge. When you think flex interest only, just think the bridge loan. It's for the fix and flipper. I know this is actually this point I made here is meant for the last slide, but I'll just tell you who this is for. This is for that flipper who owns assets, but they need to pull money out of those assets to go to their next flip. So it's a bridge loan on existing rental properties or on existing properties that may have not been flipped yet. The rate's 7.99 to 9.99, not bad. It's not over 10%, which you'll see on most scenarios. They do go up to 75% loan to value on purchase and refinance with this product. And right here is the big point. It's 24 months interest only. So like I was saying, it's a bridge loan for those investors that want to pull money out of their existing assets to reinvest in more assets. And this type of investor who's doing this strategy, they don't want another 12-month interest-only loan. They want something a little bit longer. It relieves the pressure, makes things easier for them as they invest in more real estate. So 24-month interest only, that's a solid term for somebody, especially someone who's focused on cash flow, who doesn't want to necessarily pay a 30-year mortgage with principal, interest, and taxes. This actually keeps the payment low because it's an interest-only loan. And if someone's got a rental property and they got an interest-only loan, the payments are so low, it looks real good from a cash flow perspective. The rent's coming in and the payments are low because it's interest-only, compared to like a fully amortized loan with principal, interest, taxes, insurance, very expensive. It lowers that cash flow that you could possibly be getting if you were doing an interest-only loan like this one. So that's a big sell for real estate investors. We go up to $2 million on this one, as you can see. So Velocity's got $2 million loan amounts. 675 FICO score requirements. So it's a little bit tougher to qualify on this one compared to the others, but 675 is not too hard to get these days, especially with all the credit repair companies out there. No prepayment penalty. So this is one of the big things that Velocity was happy to get out, was issuing a bridge loan with no prepay. It just helps the investors not have to worry about that exit strategy. And then finally, you got the first time investor. That's okay. So it just lowers the loan to value a little bit to 70%. And again, this is a bridge product, but only on 1 to 4 investment properties. So don't think multifamily apartments and commercial properties on the bridge side when we're working with Velocity. Strictly 1 to 4 investment properties on the bridge side. And then finally, you can white label these loans as well. So just hitting the major points here, 799 to 999. It's very good. It's very competitive on the on the hard money side. 24-month bridge, interest only, great for investors who are looking to earn their equity on the appreciation of their property over several years versus paying money towards principal. There's two mindsets there. Either you're trying to earn your equity on appreciation, or you're trying to earn your equity by paying off the loan. Doing this strategy, it's an interest-only loan, so you're not paying off the loan, but you are earning equity on the appreciation. And then finally, no prepayment penalty. That's a big deal for investors who are trying to pull money out and reinvest in more real estate. They don't want the prepay. And also, if you can white label a loan, man, that helps your brand. Like I said earlier, you will show as the lender. It prevents borrowers from going around you. All right, so let's jump into one more point on all this. The first loan that we mentioned, the 30-year fixed rate term, it's called the Flex Perm. There's no origination points on that. So it's really nice for brokers because you can pump a lot of points into it without having to pay the lender, or the lender pumping up the points on their own. But when we're talking about the interest-only products, such as the ARV Pro loan and this Flex interest-only loan, the lender has to charge origination points because the term is so short. So there are origination points for these two loans. And those origination points is 2 points. So the lender wants 2 points on this deal. Now, the cool thing with Velocity is that they'll let the broker structure those points however they want. So the broker could say, hey, the investor, which is Velocity, wants 2 points on the front for this one. Or the broker could say, hey, we want the investor wants 1 point on the front as origination and 1 point as an exit strategy on the exit side. When the loan gets paid off, they want to see you, the borrower, paying 1 point on the exit. Or as a broker, you could push all those points as an exit fee instead of doing front-end origination. And how that helps you is on these types of loans, the broker gets paid out on the front-end origination. So it might be a benefit just to push all the origination points that Velocity is requesting to the back side of the loan as an exit. And that way you can put more points on the front. You can say, hey, 2 to 3 points to you, the broker, and 2 points to the investor as an exit fee. That's a great strategy. And you don't see this from most lenders. Most lenders just say, hey, you got to charge 2. We want 2 or 3 points on the front. That's it. No negotiation. Velocity is willing to push that stuff to the back. So it makes it real nice for the broker. Well, I hope you enjoyed this video. I hope you got a lot of value out of it. If you did, smash that like button for me. Again, it does help me with YouTube algorithms, helps me get the word out there. And also, if you haven't checked out our Patreon account and you are a commercial loan broker, or you're trying to improve your brokerage skills, check out our Patreon account. We got a lender list there that you can pull from, over 1,000 commercial real estate lenders specifically. So if you want to learn real estate side of brokering, this is the Patreon. This is the account for you. So thank you so much for watching. Again, smash that like button, and we will see you in the next video. Talk soon. Bye-bye.